What if the money you're counting on for January doesn't arrive when you think it will, and it leaves your bank account in the red? If your household runs on Social Security, this message is for you. We're about to walk through a complete reshuffle of the January payment calendar, and missing a single detail could throw your entire budget into chaos. Your deposits are scheduled for January 2nd, 14th, 21st, and 28th, depending on two critical factors, your date of birth and the year you started collecting benefits. But there's a major twist for one group that almost no one is explaining properly. If you receive Supplemental Security Income, your January check is actually landing on December 31st. Yes, this month, because New Year's Day is a federal holiday. Now let's break down the standard calendar that most follow. Your birth date is the key. Born between the 1st and the 10th of any month, your payment arrives on the second Wednesday, which is January 14th. If your birthday falls from the 11th through the 20th, you're paid on the third Wednesday, January 21st. And for those born between the 21st and the 31st, mark your calendar for the fourth Wednesday, January 28th. There's an exception. Anyone who started receiving their benefits before May of 1997 gets paid on January 2nd, no questions asked. This isn't brain surgery, but it's vital information because your entire financial plan hinges on knowing the exact moment those funds clear. And while we're talking numbers, January also brings that 2.8% cost of living adjustment you've heard about. But with Medicare Part B premiums climbing too, do you know what your true net deposit will actually be? I'm going to guide you through every layer of this so you can face January with confidence, not confusion. My mission is to transform dense government policy and complex financial rules into straight talk about what hits your pocket. With January approaching, a cloud of uncertainty hangs over Social Security dates, and I'm here to clear it up. This isn't about vague concepts. It's about your power to pay the electric bill, stock the fridge, and keep your checking account secure. So let's unlock this system together. When you master the timeline, you command your monthly planning instead of being ambushed by it. First, why does your birthday control your cash flow? The story goes back to 1997, when the Social Security Administration overhauled its entire distribution model. Before that change, every single beneficiary was paid on the third day of the month. Picture it, millions of checks flooding the system simultaneously, overwhelming banks and creating a bureaucratic logjam. The SSA's solution was elegant: stagger payments across the month using your birth date as the guide. If your benefits began before May 1997, you're locked into the original timeline, receiving your money on the third or the prior business day if it's a weekend or holiday. But if you started claiming after that date, which applies to most of us, your birth week dictates your payday Wednesday. Here's the straightforward breakdown. You might want to jot this down. It's the blueprint for your monthly cash flow. Birthday between the 1st and 10th, second Wednesday of each month. For January, that's the 14th. Born from the 11th to the 20th, your money comes on the third Wednesday, January 21st. And if your birthday lands between the 21st and the month's end, circle the fourth Wednesday, January 28th. Now, let's revisit that special case I mentioned, Supplemental Security Income, or SSI. Standard procedure sends those funds on the 1st of each month, but January 1st is a holiday, so the payment shifts forward to December 31st. If you're on SSI, your January funds arrive as this year ends. Next, we need to tackle the biggest source of confusion and disappointment for retirees today, the celebrated cost of living adjustment. The COLA for 2025 landed at 2.5%, which averages out to roughly $49 more each month. Some people saw that figure and felt relief, anticipating a little breathing room against rising prices for food and energy. But here's the uncomfortable reality few are willing to state clearly. A large portion of that increase will be consumed by higher Medicare Part B premiums. The standard Part B premium for 2025 is $185 monthly, a jump of $30 from last year. And here's the critical part. This amount is deducted directly from your Social Security payment before it ever reaches your account. Let's run the real-world numbers so the math is transparent. Assume you receive the average retirement benefit, which was about $1,176 per month in 2024. Apply the 2.5% COLA, and your new gross benefit is approximately $2,025. That seems positive, right? Seems positive. But now subtract the new $185 Medicare premium. Your net deposit becomes roughly $1,140. Compare that to 2024, when your $1,176 minus the old premium of $174.70 left you with around $1,801.30. Conclusion: on paper you got a raise, but after the Medicare increase, your actual take-home only grew by about $39 each month, not the full $49. This is the stark arithmetic of a fixed income, and it's why every dollar in your budget must have a purpose. Now, a crucial protection exists called the hold harmless provision, and it might be shielding you without your knowledge. This rule exists to prevent your Social Security net amount from shrinking year over year due solely to Medicare premium hikes. If your benefit is particularly low, think $600 per month or less, this provision activates. For example, if you received $300 monthly from Social Security in 2024, and after Medicare's cut, you kept $115s, the hold harmless rule guarantees your 2025 net check won't drop below $115. The system limits what Medicare can deduct to preserve your existing income floor. Important caveats: this shield doesn't cover everyone. If you pay higher income-related monthly adjustment amounts, RMAA, due to past earnings, you're not protected. New Medicare enrollees in 2025 also don't qualify, as they weren't in the system the prior year. Here's something that truly needs to be understood. I'll be direct, because you deserve honesty. Social Security operates on a payment in arrears model, meaning you're always being paid for the prior month. Your January deposit is for December. Your February payment covers January. This is the government's long-standing accounting method. While it makes administrative sense, it baffles countless new retirees. I've spoken with so many people who retired expecting an immediate check, only to face an unexpected financial gap. Grasping this timing is essential, especially if you're coordinating your final workplace paycheck with your first benefit. This leads to my non-negotiable advice: build an emergency fund before you retire. Aim for 3 to 6 months of living expenses in an accessible savings account. This buffer is your defense against these inevitable timing gaps. Let's discuss delivery method, because this is now mandatory. As of late 2024, the federal government has virtually ended paper checks for Social Security. An executive order requires all federal benefits to be paid electronically. The SSA is directing everyone to choose either direct deposit to a bank account or a direct express debit card. If you're still receiving paper, you must switch now. It's safer, faster, and will soon be compulsory. You can set up direct deposit via your online Social Security account or by calling the SSA directly. Don't procrastinate. You don't want to be the person whose payment is delayed because they didn't update their information. Another common question from my audience is whether you can change your assigned payment date. The simple answer is no. That date is permanently linked to your birthday and your benefit start year. The SSA manages tens of millions of payments monthly. This rigid structure is necessary for the machinery to function. You can't call and request a different Wednesday because it suits your bill schedule better. But what you can do is often overlooked. Negotiate with your billers. Your mortgage servicer, utility companies, and credit card issuers will frequently adjust your due date if you explain you're on Social Security and your income arrives on a specific schedule. I've witnessed due dates shifted by weeks, billing cycles reconfigured, and payment dates altered, all from a simple phone request. It requires initiative, but it's a powerful way to synchronize your outflow with your inflow. Now, let's glance at the future. The COLA for 2026 has been projected at 2.8%, a touch higher than this year's 2.5%. That could mean an average increase of about $56 per month. But don't start planning that extra spending yet. Medicare Part B premiums are forecast to rise sharply. Estimates suggest a potential increase of around $21.50 per month for 2026. Let's calculate a $56 COLA gain minus a $21.50 premium hike leaves a net increase of only about $34.50. This pattern underscores a fundamental truth. Social Security alone is not a complete retirement plan. It was conceived as a foundational layer, not the entire structure. Let me offer actionable steps to manage this January schedule. First, immediately list every bill, its amount, and its due date. Then on your calendar, highlight your specific Social Security deposit date for January. If you're in the pre-1997 group, paid on the 2nd, you're set early. If you're on a Wednesday cycle, ensure you have enough reserves to cover expenses due before your check arrives. This is budgeting 101, but neglecting it leads to overdrafts and late fees. Second, for couples receiving benefits, coordinate your schedules. If different birth dates mean different payment Wednesdays, you can use this to your advantage, creating multiple income streams throughout the month. Be deliberate. Sit down together. Map both deposit dates against your bills and assign responsibilities. Third, critical for anyone on a tight budget, automate your finances. Set up automatic bill payments for dates you know follow your deposit. Most banks and billers offer this. Why? It removes the temptation to spend money before essentials are covered. When your benefit hits, your crucial payments dispatch automatically, leaving you with a clear remaining balance for groceries, fuel, and other needs. The ultimate takeaway is this: understanding your Social Security schedule is about seizing control of your retirement finances. It's the difference between planning ahead and being perpetually surprised. Too many retirees enter this phase unclear on payment timing, net amounts after deductions, and how to budget on a fixed income. That ignorance has a real price in fees, interest, and daily stress. You have the choice to be different. You can be the person with a clear map, who knows every dollar's journey, and who rests easy knowing their finances are managed. That's genuine financial peace in retirement. It begins with mastering the fundamentals of your deposit dates and your true take-home pay. So take these January dates, build your budget around them, and make 2025 the year you take full command of your retirement cash flow. If this clarity helped you today, do me a favor and hit the like button. It truly supports this channel, my channel, in getting this vital info to more people who need it.